Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated.
More rate hikes on the horizon was the hint there, and that's what you're hearing from Federal Reserve Chairman Jay Powell. He says this is what he potentially needs to do to try to tame inflation in this country, taking a tougher tone on the economic outlook to bring down those prices. Question is, will they ever come down, and will we ever get to that 2% target? Let's bring in Larry Kudlow, host of Kudlow on Fox Business. I heard you in the background say same old, same old. Is that in relation to Jay Powell basically saying we're going to have to keep raising rates to get these prices down? What was that?
Can I say, I actually agree with him about raising rates and pulling more excess cash out of the economy. But, and it's a big but, the reasoning is wrong. He shouldn't be telling the country that I got to do this and raise rates because the economy is too strong. He should say, I have to do this because inflation is too strong, because prices are rising. His mandate is not to fine-tune the economy, even though I know the all-powerful Fed thinks that's what it's supposed to do. It makes a big difference. You know, working families, blue-collar people, pipe fitters, God knows who.
They're paying for the policy mistakes that
Right.
led to this inflation.
That's it. They hear this and they say, why are you crushing my livelihood? Why?
Yep.
But if he says to them, it's because prices are rising too fast, like grocery prices and food prices and electricity prices and utility prices, they know that, and they actually might understand that. If he would say, the faster we get this done, your real wages will start going up again. They've been going down for 2 years. They're actually 4% below the trend line pre-COVID, that kind of thing. It's how he phrases it that is so typically Federal Reserve. Let's slam the economy. Let's slam small business.
Okay,
no,
but wait, but that is the goal. That is the goal, though.
No, it shouldn't be the goal.
Okay, historically,
the
you've
goal
got
is to
to
bring
actually
down prices.
inflict major economic pain on the country to bring prices. Okay, all right, set me straight here. I've been out a little bit. Catch me up here.
No. Look, I have been through periods in my time with very strong economic growth and very low inflation. Can I raise it?
I reference a moment in history where that's been the case.
JFK, after his tax cuts, JFK had an economy 5.5% for 7 or 8 years. The inflation rate was less than 2. Ronald Reagan, after the bad Jimmy Carter recession inflation, Reagan, with his tax cuts and deregulation and so forth, had a 5.5% economy for 7 years. Actually, some people would say the economy grew for 2 decades with virtually no inflation. Trump's tax cuts was followed by less than 2% inflation and a boost in economic growth. This theory that there's Phillips curve and too many people are working and we don't want workers to have high wages is nonsense.
That's a bad message.
It's been proven time and time again it's not true. We've had 25 years of stagnation, for heaven's sakes. It's time to grow the economy. What Jay Powell should say is, I have to do this because prices are rising, not because the economy's rising. And secondly, he should... You know what, Senator Kennedy?
I rarely disagree with you, but I don't understand how you bring down prices if you don't inflict pain so that people aren't spending.
You pull excess cash out of the economy. Point number one, that's Milton Friedman's point.
Okay, got it.
Point number two, get the federal government to spend less.
Yep.
Lower taxes, not raise them. You see Biden's raising taxes across the board in his new budget. He thinks that's going to solve Medicare and everything else. It won't. It's going to damage the economy. And stop over-regulating and strangling the economy. In 2 years, Joe Biden has put up over 500 new regulations, costing something on the order of $500 billion to destroy business. What you want to do is grow the supply side of the economy, more goods put out there, and then drain cash so you have less money chasing more goods.
Okay.
And what happens here? I have the same amount of money. You and I, same amount of money. Okay, now, we want to buy apples.
Yep.
All right? All of a sudden, a bunch of new apples come on the market. We have the same money. What happens? The price goes down. Okay? All of a sudden, all those new apples go away. What happens? The price goes up. The point is, money should be stable. Excess cash, take it out, okay? I think that job is pretty much done. But on the supply side, on the investment side, on the productivity side, that's where the problems are. And here's, Senator John Kennedy told me last night, it was pretty good. He said, Jay Powell, here, you've got to stop spending. Overspending is one of the biggest problems here. Overspending is, in some sense, the root cause of the inflation in the last 2 years. So Senator Kennedy says, well, Jay Powell needs to go on Amazon and buy himself a spine so he can go and actually say to members of Congress, you're the stop spending. That's what I want.
Right.
Lower prices and raise growth. Produce more apples, Sandra, and prices will come down.
Honeycrisp, please. You know what, Larry? That makes total sense. I just don't know.
People don't think of it that way.
I don't know why 2% still a target.
They don't.
I don't know if we can get there. Maybe with growth. All right, I gotta go. We ate up all the time. Okay.
And it makes people happy.
Larry.
But you've also said higher longer. Is that still the case?
Yes, well, and as I said in my testimony, we look at the data since January and also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is likely to be higher than we'd expected.
Whoa, as millions of Americans continue to struggle to pay for the basic needs for their families, they're also struggling to pay off credit card debts that are on the rise. Federal Reserve Chair Jay Powell is warning that the fight to rein in inflation might take longer than expected. Let's bring in Grover Norquist, president of Americans for Tax Reform. Grover, I've been looking forward to this segment because could you please bring us up to speed on what's going on here? I've been away a little bit, but I'm watching these markets, and the markets seem to be telling Jay Powell, back off, right? He's using more aggressive language about raising interest rates even further to tame inflation, might be even on a track to raise those rates even faster. So he's got markets sort of spooked here. Give us your top line thoughts here on what's going to happen next, because this is affecting every American family.
Yeah. Well, it's not fair to blame or credit Powell. The inflation that he's trying to combat was created by the trillions of dollars, the first $2 trillion that Biden spent, and then the $1.7 trillion that he added to that on top of normal spending. So this tsunami of cash, which makes everybody's dollars worth less, is what Powell's trying to fix. However, the president with his new budget continues to spend more, and adding to that, he's raising taxes. When you raise taxes, you actually increase the cost of all goods and services in the country, and you make the price of goods and services go up. The kinds of taxes that Biden's putting in are taxes that reduce the value of companies. The buyback tax. China doesn't have one of those. We do now, where companies that want to invest in themselves, which is healthy and good, actually have to pay a fee to do so, making the value of your 401k, your IRA worth less. So the policies across the board that the Biden administration, taxing, spending, the regulatory regimes, the attacks on the production of energy, raising the cost of energy simply by not letting people get permits to look for more energy, as was done in the previous administration, where lots of new energy came online in the United States. So,
well, just so
Powell
you
is not the
know,
only guy
Karine
doing
Jean-Pierre
this.
just had a briefing at the White House, and she is talking about more taxes, going to bring in more revenue. She says that there's going to be more revenue from quadrupling the tax on stock buybacks in this country. She brought up tax increases on anybody making over $400,000 a year. By the way, that includes households, so that could be a couple jointly making that amount that will see their taxes go up. So that's the discussion you have at the White House right now. But Grover, explain to me this. There are still segments of this economy that are just on fire. You know, you've got the wealthy that are doing very well. Restaurants are packed. Real estate's maintaining value in a lot of parts of the country right now. But it seems to me that it's the lower middle class that is getting hurt the most by this inflation crisis. So are they going to be able to rein this in, and when?
Well, not doing any of the things that Biden is either doing now or promising to do. Matter of fact, he's opposing doing all the things that might free that up. when they had the shutdowns and people stopped working, and then a great deal of welfare spending, paying people money for not working when they're not working. You have a lot of people for whom going back to work would be an expensive project because there's so much welfare money, food stamps, and flowing in and around. People who should be back at work are not, and that leads to all sorts of challenges, including worker shortages at a time when there are a lot of people who have left the workplace rationally because there's free money to be had from all of the spending programs that Biden and the Democrats have increased.
Yeah, and I think people have to realize that historically, you have to see unemployment go up to get those high prices that shouldn't have happened in the first place, to get them down. And Powell did not rule that out. He said, quote, the Fed's fight against inflation was very likely to come at some cost to the labor market. The question is just how high will that cost be? Grover, good to have you here today. Thank you.